Morning, Steve Free in Chicago with the grain comments. Well, today is USDA report day, and the market will be focusing, I think, on three things. Number one, what do they do with the U.S. corn and soybean yields? That average trade guess is a little bit lower than trend yield that they're using in the July report, but there are reports of some potential record yields in the Eastern Corn Belt and in the Delta. So does lower yield potential in the West offset those records? It's also a farmer survey and no objective yield data from the fields yet. And last year, the farmers were more optimistic about the corn and bean final yields due to a dry August. There was one analyst yesterday that put out a comparison of the August precipitous percent of normal for the Midwest this year versus last year, and the maps are almost exactly the same. We'll also be watching what they do to some of the world numbers. Do they bring the Brazil corn crop down? Does that help lower the U.S. corn carryout? Also, do they bring down Canada, Russia, and U.S. wheat crops? And does that lower world wheat exporters' stocks to usage ratio to a level that would push wheat prices higher? Again, corn and soybean prices have been in a trading range for at least a couple of weeks. If we're a bullish report and 20 cents higher in beans, 10 cents higher in corn and wheat, you could probably see increased farmer selling and less consumer buying. And we probably would snap right back to where we are now. If it's a bearish report and it's 20 cents lower in beans and 10 cents lower corn and wheat, you could actually see farmers stop selling and the consumer buy, especially maybe the Chinese. And so we'd maybe snap right back to where we are before the report. So again, a bearish report probably has more significance to long-term price trend than a bullish report. It's tough to market rallies to keep those prices high during U.S. harvest. But again, at post-harvest, we could see a rally in corn, beans, and wheat. Number one, to reflect some tightness in the world supply and demand, but also to make sure in U.S. we see increase in acres with competition from all crops: corn, beans, wheat, sorghum, oats, and barley, and even canola. As far as the other news in the marketplace, I think that word that China might be slowing down or even closing its number one port due to COVID could offer some resistance to the soybean market. And also, we'll be watching pretty closely the weather. Over the next 10 days, there is going to be some fronts that move across out of the PNW into the northern plains and western corn belt. Right now, it shows rains in those areas. The extended outlook also has some rains in the western Midwest. But the question mark is just how much and where is it going to rain in the West? We could be surprised Monday when we come in that the amounts in the West are less than what's forecasted currently. Outside markets, again, Biden administration is asking OPEC to increase production to bring energy prices down. We're still looking at big spending out of Congress and what that does to inflation, and also watching the spread of COVID and what that does to the economy. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.